You don't have a strategy problem, you have a you problem. 90% of traders lose money, and you probably already knew that. Here's the part no one says aloud. Almost none of them lose because the setup was wrong. They lose because of what they did the second real money was involved. I'm going to show you exactly what happens in your head when you trade and the system that shuts it down. This is the only trading psychology video you'll ever need. So let me tell you how I learned this, because I learned this the most expensive way. When I started, I did everything you're told to do. I studied the charts for hours, found a model that actually worked. On a demo account, I was calm, I was patient, followed my rules, and my equity curve went up. Then I went live, same model, same charts, and I gave it all back. Nothing about my strategy changed. The only thing that changed was that it was now my real money. And the second it was my own money, I became a totally different trader. I moved my stop because I couldn't stand to be wrong. I doubled down just because I wanted to get break even. And I'll sit down and watch a winner become a loser because I was too scared and too greedy to close. The charts was not the battlefield. It was my own nervous system. And until I understood that, no new indicator, no new strategy, no new guru was ever going to save me. So here's what's actually going on. 4 things your brain does automatically, every one of them running quietly against you. Number 1 is loss aversion. Your brain does not feel gains and losses the same. Losing $100 hurts twice as much as making $100 feels good. And that's not weakness. That's literally your wiring. And it's kept your ancestors alive. But on the charts, that is poison because it makes you do the exact opposite of what worked. When a trade goes your way, you close your profits too early because of the fear of giving those profits back to the market. When a trade goes against you, the pain of taking a loss makes you hold and makes you move your stop loss. You cut your winners short and you let your losers run. And that is quietly killing your account. And you don't do this because you're stupid. You do this because your brain is protecting you from pain instead of growing your account. Number 2 is a dopamine loop. So a slot machine in a casino and the trading screen, they literally work the same way. It's called the variable reward. You pull the lever, sometimes you win, sometimes you lose. You don't really know what's coming. And that randomness is the most addictive pattern to the human brain. It's not the winning, it's the not knowing. Your brain releases more dopamine in the anticipation than in the actual winning or in the payout. So you end up trading for the hit, not the edge. You take a setup that isn't really there. You overtrade in choppy markets because sitting on your hands feels boring. So a casino doesn't beat you because it's lucky. It beats you because it knows that you cannot stop pulling that lever. So the fix is not more willpower. It is simply taking the lever out of your hand. Number 3 is tilt. The moment a trade threatens you, real money is on the line, the thinking part of your brain goes quiet and the survival part takes over. There's a system that fires when a car swerves at you, fast, emotional, and is genuinely dumb. And the threat, you literally get dumber. So you take the trade that you swore that you not take. You revenge trade to punish the markets for taking your money. And you size up just because you feel like you can win it all back in one shot. Every decision feels urgent and every one of them is wrong. So this is why a good trader and a tilted trader can be the same person 1 hour apart. The trader didn't change, the chemistry did. You cannot out-discipline brain chemistry in that move. The only winning move is to decide what you do before the threat ever shows up. Number 4 is outcome bias. You judge your trades whether they won or whether they lost. And that feels obvious. It is also the trap. A good trade can lose and a bad trade can win. And if you judge by the result, the market will teach you the exact wrong lesson. It would actually reward you for breaking your rules when a reckless trade happens to pay. And it will actually make you abandon a perfect setup because the last one stopped you out. One result tells you almost nothing. The market is too random in the short term. So you have to judge the decision and not the outcome. Did you follow your process? Yes or no? And that is the question that builds up a trader. So that is the enemy. 4 hardwired reaction. All of them automatic, all of them working against you. And here's the part that changes everything. You don't beat them by trying harder. You beat them by building a system that makes the right move the easy move. 4 parts. 1, define your edge. You cannot be disciplined about nothing. If your rules are vague, every trade will become a judgment call. And every judgment call is where your brain hijacks you. An edge is a specific, repeatable setup, defined entry, and a defined point when you're wrong, and a positive expectancy over a large sample, written down in black and white. So clear that if you handed this over to a stranger, they'll take the exact same trades as you. Now, the goal is not to predict the next candle. No one can do that. The goal is to have one thing you do the same way every time so that the decision is already made even before the emotion arrives. Number 2, you need to fix your risk. This is the one that quietly removes the most out of psychology. If you risk a small fixed amount on every single trade, one trade can no longer hurt you. And when one trade can no longer hurt you, that threat response will never fire. You stop trading scared. Now here's the math no one looks at. If you lose half of your account, you actually need to double what is left in order to get break even. Now the deeper the hole, the steeper it is to climb out. So survival is not the boring part. part of trading. Survival is the entire game. So the trader who risks a small fixed amount and stays in the game longer will always beat that trader who is risking the entire farm and is gone by Friday. So protect the downside, the upside will take care of itself. Number 3, think in probabilities. A casino will lose hands all night and it'll still win because it's not betting on the next hand. It's betting on 10,000 of them. And you need to trade the same way. A single trade is a coin flip, which is dressed up as a verdict. It means nothing. Your edge only shows up across a large sample. So stop living and dying on that one trade in front of you. You're not the gambler at the table. You are the house, running the same edge again, letting the maths and the probabilities do its work all the time. When you really believe that one loss doesn't make much of a difference, it drains the fear out of it. And a red trade or a red day stops becoming a failure. It becomes one data point in the system that you know works. Number 4 is journal the decision and not the profits. You can't fix what you don't measure. Most traders I see always log the money. That is a wrong number. Log the decision. So for every trade, one question: did I follow my process? Yes or no? Now you have 2 separate scores: how good your process is and how well you followed it. So every problem you have lives in the gap between those 2. And the journal is the mirror that shows you the gap and how you can close it. And without it, you keep repeating the same mistakes over and over again, even with a different pair. So let's bring it all together. You don't lose because you're not smart. You lose because your brain is running survival software in a game that punishes survival instinct. Loss aversion, the dopamine loop, tilt, outcome bias. All of them are automatic, all of them are normal, and all of them are beatable. You don't beat them with willpower because willpower will run out the exact moment you need it. You beat them with a system, a defined edge, a fixed risk, probabilities over prediction, and a journal that keeps you honest. Discipline was never a personality trait that you were born without. It's a structure that you had not built yet. Now, here's the honest part though. Almost nobody builds this alone. You build it faster around people who are doing the same work. People who will call you out when you move your stop loss or you chase a trade. And that's the reason our whole community exists. It's free to join. The link is in my bio or below this video. And if you do one thing after this video, go and put your edge in your risk rule in writing today. Master your own mind and the charts will get a lot quieter. See you on the inside.